How are we all? I'm looking at all of your comments in the chat saying hurry up. So that gave me a bit of a laugh this morning. How are we all feeling? Welcome to the start of a new trading week. I hope you're all well. As you start to hear me, be sure to jump in and let me know that you can hear me okay and you can see everything okay. Who have we got jumping in here? I saw a message from Lind. It's 2 a.m., but I didn't want to miss this. That is amazing dedication. What's up, Mike, Ivor, Alexandru, Victor? Who else have we got here? Alicia, Janet, Theo, Kerry. Awesome. Brandon. Good to see you all, guys. Okay. Well, I'm going to get straight into this. I'm going to do this session a little bit differently to how I usually do the Tuesday sessions. Usually I start zooming out to get an overall view and then we come in a bit closer, but I'm going to go the opposite way. We're going to start zoomed in and we're going to make our way out. Sorry. The reason for that is because I just want you to be really, really careful of what is going on with Bitcoin right now. So I want to point it out before Asia opens, just so that you can be aware of it in case anything changes. Now, if you're new here, you're probably not going to be aware of what I'm about to say, but welcome. I'm about to go over some price action that I was talking about on my last week's videos that has finally reached the area that we wanted it to. So be sure to go back and watch those after this if you want fuller details. But if you are regularly here, then you will know exactly what I'm talking about. So first of all, let me just quickly show you what I'm talking about on the 4-hour time frame. We were talking about this last week as the dream entry for rejection for us to get a really juicy position for a short. Now, the reason for that is because we had our W formation, we had our rise level 1, retrace, rise 2, retrace, rise 3, and then that lined up with previous market maker candles over here. And we wanted to make sure that Bitcoin did not come back into this price range here where it had wicked once before to then form an M formation after the 3-level rise. That is what we've got at this point in time. We did have our 3 hits to the high to get us into that range with a bit of a stopping volume candle. So all looks good. However, there are 3 really important elements to the model. And those are, the very first number 1 element is the pattern. Which is the W, 3 rises, M, 3 drops. The second very important element is the timing, and the third important element is the levels. So we have the levels, we have the pattern. I want to talk about the timing, however, because as you may know or you may not know, we don't have any news events today until tomorrow night. So basically 2 days really if you're an Aussie. We've got CPI 10:30 p.m. tomorrow night, but that leaves us free to trade, like just trade, free of manipulation from yesterday, today, and into most of tomorrow. So therefore, the question you have to ask yourself is, now if we go back down to the 15-minute time frame, is, as we know, the weekly setup is a 3-day swing, usually one way, and then a 3-day swing another way. So if we don't have any news events that affect that, then where did our 3-day swing start, right? Because if we zoom into this area here, we can see on the weekend we had a W formation. I'm now on the 15-minute time frame, so we look for our 3 rises and drops and get out. So we had our W formation, we had our rise 1 here, rise 2 here, rise 3 here. That trade was over. Then we reset and we either look for an M or a reset of a W. Knowing that yesterday was fake move Monday, this is one thing that I want to be really clear about. Fake move Monday tends to freak a lot of people out and they believe that you shouldn't trade at all. If you're a day trader and you're aware of the fact that Monday is usually a fake move, you can absolutely exploit that. If you're a swing trader that is looking for 3-day swings in either direction, that's when you put yourself more at risk if you identify your 3-day swing on the Monday, because that could be a fake move and the real trend starts Tuesday. So as a day trader, don't be scared of fake move Monday, because there is a huge opportunity there. For example, a lot of people would call this whole move up here fake move Monday, and they may be right. We don't know that at this point in time. But in my opinion, that's not a fake move Monday. That's a trade. It is a very big trade, actually. You had a second W formation here, and you had your 1, 2, and you had this third rise here, which was the spike into our area of interest from last week. So that was a beautiful day trade there for a day trader. In my opinion, this move here is not the fake move Monday. This move here in the dead gap zone was the fake move Monday. Why? Because price was moving up towards the end of the weekend, and this here was a stop hunt or designed to induce people to go short, believing that this trend was over, and it trapped a lot of people here before price moved swiftly in a direction. So if that's the case then, and that was fake move Monday, and this here is the actual beginning of the 3-day swing, then should we be bearish, right? That is the problem that we have right now. Number 2 is we can identify from that move that we had our 3 rises on the 15-minute time frame. We had our spike into the high, which created the first side of the M, perfect. We had our second side of the M with a bearish candlestick pattern right here, perfect. That was the short entry, great. Ideally, the second side of the M, we want to see that break the 50 EMA, which it didn't at this point in time. It actually held it. Luckily for us Aussies, that was in our sleep, so we didn't have to FOMO out. But it actually held the 50 EMA basically throughout the entire US session. Then we had this false move into the dead gap zone that then eventually broke it. Now, this here would be drop level 2, which has broken the 50 EMA. The positives that we have for a short position is that A, we've broken the 50 EMA, and B, the 10 and 20 EMA have crossed under the 50. That's great. However, where price is right now, what I would be very, very cautious of is, because if you look at the bigger picture and you're keeping in mind, even as a day trader, that this should be a 3-day swing to the upside, I would be very, very careful of believing that this is the move that is going to end up being the juicy M that we really wanted last week, that is going to take us back to the lows again. There's no reason for price to retrace here. So it comes back to the 3 most important elements of the model. Number 2 being the timing. There isn't a reason for price to reverse here. There is, however, a reason for price to retrace here, which is different. So therefore, if this is just going to be a retracement and not an actual reversal, what we would be looking for today is potentially only one more drop. And then we have to think about where that drop might take us to. So at the low here, the initial low of the day that we have so far, we're at 23,667, right? So we want to see if there is one more drop to come, where might that take us to? And we want to look left from that point, from below that point, to the previous market maker candles. Now we have many. So considering we have many, we kind of want to rein this target in a little bit. And that's where we then turn to yesterday's initial high of the day, the previous day's high of the day, and we match all of these things up with those candles as well. So the one that kind of makes the most sense to me at this point in time would be this candle right here. So I'll mark that as an area of interest. And in addition to that, now if that's my area of interest, that means I'm hoping that Bitcoin does one more drop into about 23,420 to 23,640-ish area. So can I rein that in a little bit more? And what I want to then look for is on the heat maps, I want to then look for, well, where are the biggest or the largest current buy orders, which of course this bit we want to reassess when Asia actually opens, because these could be fake orders in the dead gap zone, but we'll go through it anyway, just so that you're aware. So we've got 1.5K at 23,550 and 1.4K at 23,500. Now, if I did this earlier. If I go and mark those levels on my chart, you can now see that those current buy orders that are currently there line up very well with the beginning of that candle that I marked. So now, in addition to that, what we want to then look at is to give us an idea whether this 3-level drop will continue down, or is it actually just a retracement before further upside. That's where we then turn to high block. So in high block, we want to have a look at the delta. And am I on Bitcoin? I certainly am. So having a look at the delta for Bitcoin right now, it's at 9.9 billion. Now, we know that usually we want to have that get up to or beyond around 20 billion. Lately, it's been 17. So let's go with 17. So we want to see that get at least into the high teens before we would expect that price will turn around. And then in addition to that, we have to see what is available higher, because if the market maker is going to move price higher, there needs to be liquidity above current price for them to grab. So when we look above current price, it's pretty white. Like there's not a lot of liquidity up here, meaning not a lot of people are shorting, which means people are very bullish. So therefore, will the market maker give you your wish by pushing price up in hopes to encourage more shorts at a higher level? Why would those shorts be at a higher level? That's what I'm going to show you when we get to the daily time frame. So we'll park that one for now. But all we can see at this point in time is that there isn't a lot available above where price is now. But another strong move like yesterday to the upside, is going to encourage more people to open longs, because see how many big circles we have here that basically did the trick, and you can see out here how wide they are as well. But at the same time, it's going to encourage the people who like to pick the tops to open shorts, which gives that liquidity. So currently in the visible range, the highest level we have is about 25K, but the more bigger area of interest is around sort of 24.5. So we're still sitting between 24.5 and 25K. We did notice last night in the Discord, by the way, it's still the beginning of the month. So if you are wanting to learn this method in detail, be sure to jump in our Discord. The link is in the bio. First class is where we teach this whole method in full. So we were talking about this in Discord last night, that we identified on the heat map, so very large orders at 24.5 and also 25K. I want to have a look to see if they're still there in a second. But before we do that, below current price, we have a very big area here at 23.6. So if we get our third drop and that third drop turns out to just be a retracement, 23.6 is an area where the market maker will be able to collect a lot of liquidity to basically refuel the engine to then drive price higher. So then we want to have a look at where's 23.6 on our chart. And again, now we have the third confluence. So we have our trading light long orders. This red dotted line is that 23.6 high block range. And we also have the market maker candle. And finally, if you want more than that, we also have the 200 EMA. So what I would be watching for today, if you are in a short position, I would be watching to see if we get our third drop into this area. Watch very, very closely how strong the bounce is out of there. Don't assume you've caught the position that takes us down to, 20K again. This may not be it. So that's what I would watch for as a target for now. The other thing then is, where would I scratch this trade if it turns out we don't get back down into here and Asia opens and pushes us up to the upside? These were the previous sell orders. Let me just double check 24,000 if that is still relevant. So we've got 24,000 to 24,200 is still the sell zone. So that's a bit tighter. Let me just quickly change this one. 24,000 to 24,200. So this is our current sell zone here, which is good for our potential third drop at this point in time. Why? Because you can see that this sell order right here is trying to keep price below this previous candle here, this previous market maker candle right here. So as long as we stay below this level, I would say the current initial high of the day, I would expect that third drop. But if price pushed back up into this zone, or you saw the 10 and 20 EMA get back above the 50, that's where I would scratch the short position if we didn't come back down into this zone first. So those are the things to watch out for. If you're currently short, don't FOMO out, because there may be more in this and you may be good. Another good point about this is that price currently, very, very dependent on what Asia does, but price currently is sitting right on last week's high of the week. So if we can get back below that, then that's going to give me more confidence for our third drop. Now, the reason why I think this may be just a retracement, not an actual reversal, is A, like I said to you, the timing, and B, now if we zoom out, let's go to the 4 hour. I'll just get, hang on, let me just hide these. That'll do. Okay, so the problem is, even if we came into that area, if we got a bounce out of it, we've got a higher low yet again. Looking left here, we can see that we still have all of these candles up here with a possibility of recovering. We also have the 50% line of the last daily market maker candle, which is at 24,400. So if we come into this zone, bounce out of it, 24,400 is the first target. The second target is the 50% line of the monthly market maker candle, which is 24,870. Now, if we can get above that, then I suspect we're going to come up and actually close out this whole zone here, which is at 26,500. And I've kind of been banging on about that level for a week now maybe. So I'm not ruling out that we won't go up there. It really depends how price reacts in this zone that we've marked out at around 23.6. If we bounce out of there, then I would be looking for a further move to the upside, which just makes sense with the 3-day swing idea. And in addition to that, on the 12-hour time frame, that candle top right there, it lines up around the 200 EMA as well. So definitely the 26.5 really has my interest as the area. I don't believe that the low is in for Bitcoin. I do believe that we will revisit the low at the very least, but it is possible that we break lower. And actually, I'm going to go to a different chart to show you what I think. I think I've marked it out on here. Yes, I have. So on the daily, if we just zoom out and let's just take this for what it is. Let me get rid of these moon signals. Speaking of the moon, we also have the bullish moon phase. For Australia, it's the 12th of August. For the rest of the world, it will be the 11th. And so usually we dump into that and then pump out of it. But that could be a post-CPI event that actually happens. Now, if we zoom out on this, the reason why I believe that the low isn't necessarily in yet is because if we draw a very basic trend line since 67K down, we've only had the second touch here. We have not yet had a third touch to that trend line. We can easily identify drop 1, board meeting, drop 2, and we could potentially be in drop 3 now, which, as you can see from the drops into the board meetings last a while. So this could be drop 3 into the board meeting right now, or it could be coming. Now, so number 1, we've only had 2 touches to this trend line. Number 2, if we do come back up into that 26,500, look how that area is going to end up being the third touch to that trend line. Like, people will turn, well, they should if they have a brain, will turn very bearish at that level, right? Number 3, when we take just this zone and we draw fibs from this drop down, that 26,500 or 20, around that, lines up with the 61.8 as well. So anything between this 50 to 61.8 is where I'm kind of looking for the actual rejection from this move up here, not necessarily where price is now, which is why I'm skeptical of the current M, and I believe that it has a high chance of just being a current retracement on a lower time frame, not an actual reversal. Now, let's talk about worst case, because I know you're going to hate this conversation, but let's just have a conversation. So here's the thing. The price has made it currently around about twice to close to the 50% line of that fib level. So if we were to get only to there again and then drop through, we would expect price to return back to the 0 line from the 50 fib, which just basically means a revisit, probably not into the wick zone. Let's go to the candle closes. It's just basically a revisit of around 19K. And that could be the end. Like, that could be the worst that Bitcoin gets. Number 2 is, not the 50% line. If we get up to the 61, we would expect to get back to the 0. If we get to the 50 and reject there, we would expect to go to the -27. This area here, I've had marked from basically the start of this bear market as my potential worst case scenario. And that is marked off this previous weekly market maker candle, which is between 13.2 to 16K. Absolute worst case scenario. It makes sense to me as an area because there's the candle there. It was a high before that. It all just kind of makes sense to me. Not saying that I think we're going down there. What it's dependent on is where does this retracement end up rejecting. If we can push up into that 61 and get our 26.5K target, then I think at worst we're just going to revisit the low down here, and that will be the time to buy in. If we can't get past the 50 and we reject there, then we're looking into, say, 14 to 16K. I don't think that we will get much worse than that at this point in time, but obviously if we do end up down there, we have to reassess. On that note, very important, I'm not talking about in the next 2 days. I'm talking in the next 6 to 7 weeks. So just keep that in mind as well, that this is definitely a very long-term target if we cannot break past the 61.8. So now we have to look at the other side of that. Well, it's an equal chance at this point in time that we do break that, we retest, and that's it. The low actually is already in. So we've got 2 scenarios here, but both scenarios really depend on what price does at 26,500. So just keep that in mind for a long-term target. And that is why I'm also not all that, is this the right one? Yes, it is. That's why I'm not all that married to the current M. And I am just looking to see if it turns out to be a retracement or an actual reversal. So don't FOMO out of good trades. If you're in a good trade, stay in your good trade. Have your conditions set. You probably wouldn't exit this unless price returned into this zone here if you were short. And if you are currently long, well, you should have taken profit at the end, to be honest. But you could have a second chance position for a long if we come into this area and bounce. Finally, if the third drop ends up being rather dramatic and it does break through all of this, there is a chance it'll come for the 800 EMA. So don't rule that out either, as the third drop taking us as low as 23, 200-ish, because that does also line up with a previous high of the day. So those are the two levels to watch for our final drop. Look for a strong bounce there. If you get a W, if you get a stop hunt, if you get, what else could you get? Railroad tracks, any sort of bullish candlestick confirmation off these two EMAs, if we can get down there, I would consider this to be a retracement. Finally, Jesus Christ, I've talked so much today. I'm very sorry. But finally, this is one more reason I just really need to point out why I'm not particularly thinking this is reversal time, is because if we draw fibs from the low to the high, we can see we have bounced exactly off the 38 fibs at this point in time, which is extremely bullish. However, knowing the model that we know, we are expecting one more, which is going to take us to 50. So I hope that was helpful. What else do I want to talk about? Let's take a quick look at ETH. So ETH is the similar situation where this entire zone that I have marked here was a rather large previous market maker candle on the weekly time frame. Yeah, on the weekly, I think it was the weekly, I can't remember. But anyway, what happened last night was we wicked right into the weekly market maker candle close. Yes, it was. That was the candle close literally there at 1806. And this level above is a weekly wick, right? So that was a good area for a rejection. We had our stop hunt after our W formation, our three rises, stop hunt here, trapped some traders in this level right here, and then we moved away from the level. Beautiful. Had our drop, unfortunately, didn't break the 50 again. Not great. Move back up here, but we haven't come back into this wicked zone. That's a positive for the short. However, the what is this thing called? Ethereum. Sorry, guys. Ethereum is still above the 50 EMA, and the 10 and 20 are above the 50 EMA. So this is not actually all that positive. If you shorted ETH, what you would be waiting for at this point in time is for ETH to get down below those EMAs. If it can't do that, if it doesn't get below those EMAs, I would probably cut the short. This thing is going to move up further. If it can get back below, the target is going to be around last week's high of the week here, which is at around 1750. That will also be almost a full recovery of this candle. Depending on how dramatic it is, the second level is going to be the previous high of the day at 1726. I really like this area because it also lines up with a pretty large level on high block. However, ETH is like that would be a big drop for ETH. Let's take a very quick look at the Ethereum heat maps to see, do we have anything around that 1726 kind of area? What have we got going on here? There's really nothing big enough anywhere for me to see an area that I would confidently say we should bounce there. So heat maps aren't really all that helpful. But yeah, that's basically what I'd be watching for is to get back to this previous high of the week at 1750 first. If it ends up being more dramatic than that, the 200 EMA is looking delicious. Again, why? Because it lines up with this previous market maker candle right here. So beautiful area there. That's at 1740. And worst case scenario, If this is going to be a retracement, we're looking at 1726. Cut you short if price cannot get back below those EMAs and you don't see those EMAs turn underneath the 50. That's probably going to be a sign that we're going to go up today. So there you go. That's all I really have to say. No, it's not. I have one more thing to say. I just really want to quickly show you this that we have been tracking together on this channel. We went over how this is very much looking like the last global recession, this current pattern before the recession actually got announced. And just an update, because we are so heavily correlated to the stock market right now, we really have to keep an eye on what's going on with this. Currently, the S&P, we have our M formation, we have our drop one. This is the rise after drop one, the retrace before potential further downside. As you can see here, the price still has not made it to the 50 EMA. So we may continue up. We really can go up to the 61, but I kind of am eyeing off the 50. This is on the weekly time frame, by the way. So it could take weeks to get there. But if this does continue up to that 50 or 61, then that's fine for crypto to continue up. It might get us to that 26.5 goal. But if we rejected those, then that's where it's over. I would not expect, crypto or Bitcoin to push past the 26.5. It is looking very weak on the final two candles, and we still currently are under the 50 EMA. So definitely eyes on S&P. Whenever you're taking trades, S&P and NASDAQ, and also Dixie, just have a quick look at them before you take your crypto trade, because if everything looks good on your crypto trade, but this is about to do the opposite, it's going to take out your trade. So don't even need to be an expert in the stock market. You know the model, follow the model. It's the same here. We have an M formation on the NASDAQ. We have a current retracement that is struggling the 50 EMA. It's at 38 fibs right now. If it can break that 50, if it can break the 50 EMA, it may go to the 50 fibs. I would still be bearish on that. That's where I would be looking for rejection because of these previous levels here. And if we see some bearish kind of rejection, maybe on a daily from that level, then expect that that's going to be where we're going to get our final leg in crypto. Guys, if you have enjoyed this video, please smash that like button. I forgot to say that. It really helps me get these videos around the internet and get, non-shilling TA out to the world. So I hope you enjoyed that. Be safe today. Don't FOMO out of your trades. Just have your rules set, stick to your rules, and off you go. I will see you tomorrow. We'll talk about how this has developed and what we're thinking before CPI. And that is it from me. Have a most amazing day, everyone, and I'll see you tomorrow.